Hi, good day. Today I'm going to discuss Chapter 11, Other Payables and Other Receivables. Other payable means I owe people monies. Other receivable means other people owe me monies. Other payables also can say that I already used up a company's provide service or benefit, but I still owe their money. Okay, same goes to my other receivable. I supposed to I provide other people service and benefit, but they haven't paid me yet. Okay. This chapter I will cover introduction. What is the accrual and what is the other payable and other receivable, and meanings of the accrual and prepayment in expenses, as well as accrual and prepayment in income. So some of the expenses, they are similar, like a rate and rent. They will combine together in one T account. So how are we going to calculate when there is an accrual and prepayment in the combined expenses account? And also I will going to introduce the or explain the opening balance on expenses or and incomes account. It is very important to have adjustment for accrual and prepayments. So what is the meanings of other payables and other receivable? As stated here, it is necessary to make a few adjustments on the trial balance amount before you prepare the final account, which is transferred to your income statement and the statement of financial position, SOP, we call it in short. So why would we need to do all this adjustment? As in there is accounting rules. You have to follow the accounting principles, accrual and matching. So which means that I only can record the total of 12 months sales compared with your 12 months expenses amount, so that your profit for the year will be more accurate. So you must follow the 12 months total principle. Okay, so only items that related to the particular times period should be included in the statement. The timing of the actual receipt and the payment is not relevant. What is this mean in the second sentence here? It is means that the actual receipt here means that, let's say my accounting period is from January until December, end of the year, but my actual payment to the message bill, the message mobile bill. So in this situation, I only pay up to 11 months. So that 11 months actual paid, we are not considered as the amount that I'm going to record in the income statement, because actually I already used up the telecommunication service up to 12 months. I use it up to December. Just that it's my matter, I did not pay the last month. They must have total of 12 months expenses declared as a telecommunication service bill in my income statement. So therefore the actual payment 11 months is not relevant, but I only concern the 12 months figure I should pay. Okay, and income statement is prepared for a definite period of time. This is a practical application of the matching principle, as I mentioned just now. Your expenses and the sales must be matched in the same accounting period. Cannot be 11 months, cannot be 30 months, cannot be 20 months sales and 7 months record in expenses. They are not matching, and at the end of the day, your result of profit for the year are not accurate for comparison purpose. Okay, adjust the item within the income statement for amounts prepaid, or we call it overpaid, or the accrual which is not yet paid, supposed to pay. This means that the profit of loss will be shown at more accurate figures if I adjusted what I'm supposed to pay, what I'm supposed to receive into my income statement. So, and it allows for more meaningful comparison for the financial statement for years to year or similar companies' income statement. So please take note that only those expenses and incomes which related to the current financial years are included into the income statement record. Okay, now we are going to explain what is the accrual and prepayment expenses in expenses. So I give you a summarize here. This is the short note for my student. So when you see there is an accrual happens, accrual means I owe people money. I'm supposed to pay 12 months telephone bills service, but even though I use up to call my customer up to 12 months, but I only managed to pay 11 months. So the December bill I didn't pay, we call it 1 month accrual. So whenever you see, no matter it's the income I supposed to receive but I haven't received, or the expenses I supposed to pay but haven't paid, accrual I must add back to my recording. So when you see prepayment, you think of the prepayment. Prepayment means that pay in advance that the service I haven't even enjoyed yet in the future. I pay for the future. So I pay or I receive for the future, we call it prepayment. I need to minus out because I only record current year payment and incomes into my financial statement. Okay, so therefore you need to adjust. So this is my short note. Accrual I must add back. Prepayment, the prepayment amounts I must minus it out, excluded from the calculation. Okay, so what is accrual in expenses? Accrual is the amount that I unpaid at the end of the accounting period. So where an expenses accrual is means some of the benefit or service have been received during the accounting period, but this benefit service had not been paid for by at the end of the period. And also we need to apply the matching principle. Means that the any amounts that due unpaid, I need to add back to my total expenses calculation, and then later I transfer to the income statement. Those unpaid amount and later will show under the current liability in your SOFP. Okay, now when there is a prepayments in the expenses, we need to minus it out because I'm paying in advance for the future payment. So we call and the meanings of the prepayments here we can we can explain as a payment has been made during the financial year for the some benefit or the service to be received in the future accounting period. This one is very important because they usually will ask in our IGCSE short theory question part. So any amount paid during the year related to the future accounting, I must deducted out from my T account calculation. So and then later I transfer the actual income statement amount into my income statement expenses area. So prepayment amount will be included as a current asset in my SOFP. Now I need to show you how